Bitcoin's not had negative headlines in February, but it was down. But I know our technician, Mark Newton, had talked about this being a cyclical downturn in Bitcoin through the end of March. So he was talking mid-January, getting down to 62.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad, Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Tom Lee expects Bitcoin to surpass $150,000 this year, revealing critical price drivers and powerful strategy tips. We'll examine his market predictions and success stories. Let's discover these big opportunities together.
Let's bring in Tom Lee, Fundstrat co-founder, managing partner in Fundstrat Capital CIO, and I can just see you. This is Tom laying out exactly as you said. Choppy. You said exactly this. You said choppy for how long, but then the S&P again starts moving, and this is not, I don't think, an obvious or a logical conclusion to have right now. With all the bad news that we're hearing about these policies, everybody thinks the market's headed lower.
Yes, but instead we could be bottoming, maybe this week.
And this is the choppiness you were talking about. And, I think you use a combination of fundamentals and technicals, obviously,
yes,
to get things right. And the reason for the choppiness was going to be the first 100 days of this fire hose of executive orders and everything else.
Yeah, that's right. It's kind of weighing on investors' minds. We're seeing it even in the surveys and CEOs because the tariffs and Doge are, the Doge is creating austerity. Tariffs are creating uncertainty. Businesses are maybe sort of sitting on their hands. This is why I think markets have been sort of sinking and momentum has done so poorly. But to me, Friday was a good day because, it was a bad news headline, but markets actually rallied.
Yeah, World War III is usually not a good headline
yes,
for financial markets, or a continuation of a very expensive, guns and butter. Using guns or using weapons and depleting them and having to rebuild them and everything else might be good, I guess, for the economy. It doesn't seem like a great thing. I'd rather be spending it on AI or something like that, wouldn't you?
Yeah. I think, or even rebuilding parts of the U.S.
Exactly. So from here on out, you think we bottomed? Have we seen the lows already? Because we didn't get worse than, what do we get, 5% on the S&P as far as the drawdown?
Well, I think investors are going to be kind of watching out of the corner of their eye because Friday is the jobs report. Last week, consumption kind of raised concerns that maybe we're slipping into a slower or downshift in speed. So if the jobs report's really weak, there could be some panic.
I would think that it would be, we know about these crack addicts in the equity pit. They want more rate cuts. I would, if it's not too bad, just soft a little bit, and it brings back the prospect of more than one or two rate cuts, I could see the market rally on that.
Yes, that's right. I think if the job report is bad and maybe we initially panic, like even that day, then everyone's going to rethink and realize not only is the Fed put back, because the Fed now will need to cut, but I think that some of the things that look like the White House wants to slow the economy, they don't want to get to stall speed. So then the White House, I think the Trump put comes back. So I think it helps market.
Isn't the bar very high, though, for Fed rate cuts to be back on the table? Let's say we do have a softer jobs report. The Fed and many Fed officials have said that the tariff issue they would look through. And so even if tariffs put grit in the economy and we have a softer sort of economic backdrop, that may still not be enough for the Fed to do anything. So that Fed put may not be worth much.
Well, I think it just depends on what the job number looks like. The Fed has not worried about the labor market being inflationary, but they would certainly worry if unemployment's picking up or if we have a negative jobs report. I don't think it's negative, but something, it could be well under 100,000. If it is, I think the Fed would actually have to get off their hawkish paws.
What is a fundamental and the technical backdrop for bottoming happening this coming week?
Well, I think the best way to define a bottom, and Tom DeMark has mentioned this before, is stocks rise on bad news. And so Friday was maybe the first sign of bad news, the market's bottoming. But I know our technician, Mark Newton, doesn't think we're there yet. He wants to see more signs of exhaustion, but we've seen sentiment turn negative. So maybe Friday, but it could have already bottomed too.
Bitcoin's pullback from its January all-time high of $109,000 is expected to continue for a while, according to CryptoQuant analyst XBT Manager. They believe that short-term holders, those who have held BTC for under 155 days, are the primary sellers, and that long-term holders must reestablish their purchasing momentum before long positions become appealing. Caution is advised, especially since liquidity concerns are prompting more sell-offs in the near term. Before Bitcoin reached $109,000 on January 20, short-term holders increased their BTC supply while long-term holders sold portions of their positions. A similar pattern emerged in December when Bitcoin first broke six figures. Since then, long-term holder supply has declined from 15.2 million BTC to 14.4 million. The asset's price also retraced below $100,000 amid tariff threats from President Donald Trump, dipping further to $85,000 in late February. Currently trading around $87,100, Bitcoin's price remains subject to ongoing macroeconomic and market-specific factors.
Even aside from these macro sort of outlooks, how about the AI trade? I mean, we've certainly seen signs of weakening, some skepticism there, especially surrounding NVIDIA, which hasn't filled in that pre-DeepSeek gap that it created. Where does that stay? How important is that for this next move forward for the bottoming process?
I think technology is still important for the next few years. In our sector weightings this year, it's number 3. So financials, industrials, first and second. But I think it's just digesting a lot of the prodigious gains the last 2 years. But I don't think AI spending is really going to weaken. I know investors have a lot of good news baked in.
So if the market, if it does resume a move higher, you think it's the same leadership, or there has been some rotation away from some of the Mag 7 and financials have looked strong. Will it look different, or will the winners come back with a vengeance?
Yeah, in January, the first, let's say, five weeks or so, that leadership was different because it was a lot more tech outside of the Mag 7, and it was financials, and it was some mid and small caps. I think once we're through this rough patch, that's the kind of leadership we think will.
All right, you want to make some. I don't know why we told you people you were going to talk about Bitcoin, but now that we did, you do need to talk about it. It's come back a little bit. What did you attribute the move down below 80 to? Just that it's Bitcoin? What do you want?
Yes, I would say what's interesting is Bitcoin's not had negative headlines in February, but it was down. But I know our technician, Mark Newton, had talked about this being a cyclical downturn in Bitcoin through the end of March. So he was talking mid-January, getting down to 62. The weekend...
105 to 62. That's just Bitcoin.
Yeah, it's a tip.
Do the math, though. It's like, in a month, 105 to 62.
Yeah, that's a test of the result.
That hurts people that buy at 105.
Yeah, but as you know, Bitcoin makes all of its gains in 10 days. So if people sort of try to time this, they're going to miss out on a chance for Bitcoin to go back to its high.
And by the end, at some point in this year, you think it gets, because last year you thought it might get to 150 or even higher, right?
Yeah. I think it's going to do better than 150 this year.
You do?
Yeah.
US dollar?
Yes.
What? 150?
Hungarian forint?
Yeah.
I mean,
I don't know. Something that's a lot less than $150,000. That's it's a lot better than a lot higher than 150.
That's right, because it's becoming more widely held.
Yeah.
If Citadel starts trading it, it starts to have more broad acceptance.
Okay. Tom Lee, thanks.
Thank you.
Don't be a stranger. You're not, but come back again.
Bitcoin may face a challenge reclaiming $94,000 after failing to breach that level on March 2, according to Bitfinex analysts who believe strong selling pressure could persist. The coin briefly surged from $85,000 to $95,000 following President Donald Trump's March 1 pledge to establish a crypto reserve, but quickly reversed course, now hovering near $87,190. Analysts see short-term prospects as uncertain. Pseudonymous trader Rect Capital suggests the bottom may be forming based on historical trends, but warns that Bitcoin could dip below $93,500 in a downside deviation. Many remain cautious due to spot market volatility and the need for genuine buyer support to maintain higher price levels. Crypto analyst Axel Adler cites the recent buy-up at $81,000 as a positive sign, while MN Trading founder Michael Van de Poppe advises waiting for key macroeconomic indicators. The February Consumer Price Index arrives March 12, followed by the Federal Reserve's next rate decision on March 19. Master Ventures founder Kyle Chass believes Bitcoin's price will remain volatile until more authentic demand, rather than mere speculation, drives the market. The Crypto Fear and Greed Index sits at 20, signaling extreme fear, a reflection of ongoing uncertainty. Some traders anticipate short squeezes or other abrupt swings. The path back to $94,000 remains murky without robust institutional and retail interest, making further consolidation possible. With no clear catalyst on the horizon, the market continues to watch for signs of a sustained breakout or deeper correction. Despite the caution, many still hope for a surprising rally. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.